Hello, everyone. We're going to get started here in just a moment. If we can do a mic check, if you want to drop something in the chat box to let us know that you can hear us, that'd be appreciated. Alrighty. Hello, everyone. Welcome. My name's Stephanie Miller, and thank you so much for joining us tonight for our high leverage, no red tape private financing you can count on webinar. I'd like to put some emphasis to start on the you can count on part. I get calls from frantic borrowers all the time who are past their close date and their lender has left them at the closing table, right? Maybe they need additional documentation and can't close for another couple of weeks. Maybe the terms have changed and they got bait and switched. One thing you're going to get with Marshall Reddick's private financing is transparency and reliability. We actually have a couple guest speakers on the call tonight, which I'm super excited about, who can also attest to this. Like I mentioned, my name is Stephanie Miller. I'm the private lending manager here at Marshall Reddick. I've been with the company for about 7 years now. I see a lot of old timers as well as newcomers on the call tonight, which is awesome. I have my personal contact information listed here on the screen. Please don't hesitate to reach out. I would love to hear from you. I spend a lot of my day on the phone, and it's one of the many things that I love about my job. So I would love to hear from you. Again, this is my personal cell phone, so feel free to call or text anytime. I would love to hear from you. Before we get started tonight, I'd like to touch on what Marshall Reddick does overall. Marshall Reddick is a one-stop shop real estate investment firm. We have 4 services. Our first service is brokerage, where we help people buy and sell both their primary residences as well as their investment property. Our second service is property management, where we help folks manage the property in these markets on this map. Our third service is private lending, where we help people with no red tape private financing that we're going to touch on tonight. And our fourth service is mortgage investing, where we help folks invest in mortgages and mortgage funds. It's important to note that we can assist clients with purchasing property as well as managing property in all of the markets that I have listed on the screen. However, we can also lend to folks in many additional states. So here I have a map of all of the states that we lend in. If you are doing deals in one of the states that aren't highlighted, give me a call. While I can't promise that I can help, I can see what I can do. Before we dive in tonight, here's the agenda that we'll be going over. First, Marshall Reddick offers private financing, right? What does that look like? I'm sure everyone also has heard about conventional financing. So what's the difference between conventional financing and the private financing that Marshall Reddick offers? We're going to be going over Marshall Reddick's no red tape approach and what exactly that means. And like I mentioned, we're going to hear from 2 special guests. We'll go over our loan programs, and for those fix and flip and small builders that we have on the call tonight, you know that the draw process is extremely important. So we'll be going over what Marshall Reddick's draw process looks like, as well as the lending process, right? What happens when you have a deal? What does the process look like overall? We'll touch on a couple of recently funded deals, as well as some time for frequently asked questions. And super excited about this last one, but we have a promo code to give out. For those of you who have not tried out Marshall Reddick's private financing, I have a promo code for you guys to use to get a discount on your first transaction. When you go to exit the webinar tonight, you're going to be asked for an exit survey. It's important that you fill this out because we have a lot of folks on the call tonight that were referred over by other borrowers, and I'd love to give those borrowers a discount on their next transaction for referring you guys over. So please don't skip that exit survey. Your borrower who referred you will thank you. So Marshall Reddick offers financing. Real important right out of the gates, our financing is all non-owner occupied only. Unfortunately, we're not set up, nor do we have the licensing to do owner occupied lending. If you need a good referral, I have an awesome conventional lender that I can refer you to, so reach out if you need that referral. Also, residential real estate only. We don't do any commercial lending. We will do small apartment buildings, right? So a lot of times other lenders, will only do 1 to 4 units. We will finance 5, 6, 7, maybe up to 20 units on a small apartment building, but we will not do commercial lending in regards to commercial, hotels, strip malls, that type of thing. We can also assist with purchase, refinance, and cash out refinance. Most of the lending that we do are against purchases. However, I also have a lot of clients who are purchasing property at auctions and therefore have to use cash to take down those properties. And so what we do is we set up a cash out refinance as soon as they have ownership of the property so that I can get them their money back for the purchase as well as some money to renovate the property. I also have some small builders who, go and acquire lots and then they, want the construction financing. So we'll set up a cash out refinance for them in order to do the construction financing. Also important to note, we also offer non-recourse financing. This is super cool because a lot of lenders out there will not do non-recourse loans. What's a non-recourse loan? Well, a non-recourse loan simply is there's no recourse, right? So if you as the borrower default, the lender can take back the property, but they can't go after you personally for any deficiencies. And so if you're borrowing in your retirement account, the IRS states that you have to get a non-recourse loan because retirement accounts are federally protected entities. So what's the difference between conventional financing and private financing? We've all heard about conventional lenders, right? They're conforming lenders who basically conform to Fannie Mae and Freddie Mac's guidelines. Fannie Mae and Freddie Mac are government-sponsored enterprises that purchase loans from conventional lenders. Conventional lenders are not in the business of making loans and earning interest. They're in the business of making loans to earn fees so that they can sell their loans, get the money back, and continue lending for additional fees. So conventional lenders do not hold their loans to term. They're selling their loans to Fannie Mae and Freddie Mac. So why is this important? Well, conventional lenders who are selling to Fannie and Freddie have extremely strict guidelines, right? Fannie and Freddie have guidelines that are more geared towards the borrower, right? You have to have a certain DTI, debt to income ratio. You have to have a certain credit score. The property has to be in a good livable condition. There's all these different hoops that you as the borrower have to jump through. And if you don't check off every single one of Fannie and Freddie's boxes, then the conventional lender can't sell that loan to the Fannie and Freddie, and therefore they're not going to make the loan to you. So private lenders do not sell their loans to Fannie and Freddie. So they don't have to adhere to Fannie and Freddie's guidelines, and therefore their guidelines are typically more lenient. That said, however, private lenders don't sell to Fannie and Freddie, but they're becoming more institutionalized, right? A lot of private lenders nowadays are selling their loans to an end, loan buyer, or, an investor in the secondary market, if you will. And so while they have their own set of guidelines, they have to adhere to someone else's. We at Marshall Reddick, we do not sell our loans. This is huge because we make our own guidelines, right? We make our own guidelines. They're not loosey-goosey, right? We set them up to protect ourselves. However, we can make exceptions from time to time, right? We built our private lending program by investors for investors. So our private lending program was born out of the 2008 recession when we had existing, real estate relationships in various different markets calling us, letting us know that they could purchase property for pennies on the dollar. So they were asking for loans, and that's where our private lending department was born. It's also important to note that Marshall Reddick as a business has flipped property, as well as a lot of the employees within Marshall Reddick, right? In their previous lives, they were savvy investors, and we understand the type of financing that investors need because we have been on the other side of it. So we take a common sense approach. We're transparent and reliable. So what exactly is our no red tape approach? Well, our no red tape approach essentially is no doc, right? We have no doc loans or very little doc loans. So we don't pull a hard credit pull. We don't verify income or employment like a conventional lender would or other private money lenders. We don't request tax returns or similar documentation, right? We're not looking at your bank statement to source every single withdrawal and every single deposit. Those of you who are savvy investors on the call tonight know that you're constantly getting large withdrawals and large deposits in your account. If you go to a more traditional lender, they're going to question every single one of those deposits or withdrawals. So we don't necessarily care about that. We're just looking to make sure that you have the money it takes to get the deal done. We also don't require an appraisal for fix and flip and new construction financing. Most of the financing that we do are for fix and flip and new construction financing, and a lot of other private lenders out there will require an appraisal. By requiring an appraisal, it costs money and it takes time, right? So typically appraisals take a couple of weeks to get done, and therefore you can't close a loan within a week or two if you're waiting on an appraisal. So Marshall Reddick does not require an appraisal for those loans. So what is relevant in collateral-based lending? Well, borrower cash for down payment and reserves, right? We care that you have money to actually do the deal. The collateral property value and location, right? We care that it's a good asset and a good location and that you're getting it for a good deal. We also care about borrower background and experience. The more sophisticated of a borrower you are, the more comfortable we're going to feel about the deal. That said, we can lend to folks who have never fixed and flipped a property before or have never built a new construction property. We're just going to be a little bit more conservative. We're very relationship based, and so for the first few, we're going to be conservative while we build a relationship. And as you get, the projects done and the properties off the books, we'll feel a lot more comfortable and we'll become less conservative. So we take a common sense approach to our lending. Our loan programs are available for all borrowers. We can lend to entities, meaning LLCs and corporations. When we lend to LLCs and corporations, we do not require a personal guarantee, which most lenders would require a personal guarantee. We also can lend to trusts and individuals. A lot of other private money lenders out there will not lend to individuals. I'm not sure exactly the reasoning behind it, but just know that Marshall Reddick, in our private financing, we can lend to an individual. We can also lend to foreign nationals. This is another big one. A lot of other private lenders and conventional lenders will not lend to foreign nationals, and therefore foreign nationals a lot of time have to purchase property in cash. If you're on the call tonight and you're a foreign national, we can lend to you, as long as you have one of two things. You either need an ITIN number, which is an international tax identification number, or an entity that's registered in the US. So in a US LLC, a US corporation, something with a tax identification number so that we can properly report the interest that you're paying. And then lastly, non-recourse. We touched on this earlier. We have a non-recourse option only for those retirement account borrowers. As I mentioned, we have a couple of special guests tonight. We have Brad Long out of Memphis, Tennessee, and Alex DePerry out of Charlotte. We're so excited to have them tonight. I've worked with both of these individuals for several years, and I'd like to start with Brad. Brad, can you hear us okay?
I sure can.
Thank you so much for joining us. If you don't mind, would you like to introduce yourself and tell the audience a little bit about both yourself and your business?
Sure. So my name is Brad Long. I'm based out of Memphis, Tennessee, and I've really done a little bit of a lot, like almost everything in real estate. Going back to when I first started investing, I think I even wholesaled a couple houses, kind of quickly got out of that. But I would define myself as like kind of equally split between fixing and flipping, and but also balanced with a buy and hold investor. Really, buy and hold is my long game, my long-term strategy, but fixing and flipping is what I do to generate capital to continue to drive, the whole business forward.
Yeah, Brad, you have a really impressive portfolio. Do you want to tell the audience how long you've worked with Marshall Reddick and how many properties we've helped you finance?
Sure. So I believe I've worked with Marshall Reddick since 2017 now. I think Stephanie had to look this up, but I think it's been 34 properties that I've financed directly with you guys. I own around 70 doors right now. So some of the mostly single family. I do have a good chunk of duplexes and some quads that kind of help stack the door count. Yeah, it's been just started. I think my first property I purchased was way back in 2014. And in the beginning, I was one of these folks that was afraid of leverage. I was coming out of, still the Great Recession where leverage burnt a lot of people. And I think the first property I purchased just with some cash, and then, with a HELOC, just wasn't a scalable strategy, right? And as I started to build my confidence in my ability to find deals, then the bottleneck quickly became, how do I finance that? And at first I was pleasantly surprised that to find that there's people out there that will just continue to finance it if it makes sense, which Marshall Reddick has done. So it's been a huge unlock for my business, and really let me focus on operating business, finding deals, everything else.
Awesome. I know you've worked with a lot of previous lenders before, working with Marshall Reddick, as well as, some refinance lenders when you're, doing the long-term play. How would you compare Marshall Reddick's process to a more traditional lender's process?
Yeah, so first off, I think I've used majority of your different loan programs. With my buy and hold side of my business, I typically will purchase homes with a hard money loan from Marshall Reddick, and then wait for it to be, what's considered seasoned by some of my local banks. As I've built up a portfolio, I've found, good, local banks that will lend to me on stabilized properties, but they don't want to touch it until it's got at least 6 months, just show that it's stable. And also, majority of my properties I buy with, as value add opportunities. So there's some work I've got to put into them at first as well. So as I said, another huge part of my business is fixing and flipping. That for sure, most banks that I've talked to at least don't want to mess with. I've really been able to especially use high leverage in these scenarios. That's helped me really scale. I mean, to the point where if I've probably maxed out around 10 projects going on at once. So I've definitely taken advantage of Marshall Reddick's fix and flips loans. And then I've even utilized their non-recourse. So I've owned a couple properties in my IRA, self-directed IRA, and that's been just really great to leverage. There just frankly aren't a lot of lenders that will do that, that will do those non-recourse loans, and Marshall Reddick has filled that need for me too. So just really has been a great one-stop shop for me for all my needs.
That's awesome to hear. Like I said, it's been a pleasure working with you, and it's been awesome watching you build a sizable portfolio. So thank you so much for sharing with the crowd.
Absolutely.
Next, I want to move over to Mr. Alex DePerry. He's based out of Charlotte, North Carolina. Alex, are you there?
Yeah, hi there.
Alex, if you don't mind, do you want to introduce yourself and tell the audience a little bit about yourself and your business?
Yeah, for sure. Yeah, so I'm Alex. I have my portfolio's in Charlotte, but I'm originally from Canada. So I'm kind of just going through like the immigration process right now. But yeah, so I guess I'm still considered a foreign national. So I've experienced a lot of the things that Stephanie's mentioned, where it's like really hard to find lending as a foreign national. So that's where Marshall Reddick has really come in and helped me out with that. They've made it like pretty much where I go through the same process as everybody else. So it's really, really easy to deal with them. And they've been definitely instrumental to building my business up. Yep.
Thanks, Alex. How long have we worked together? How long have you worked with Marshall Reddick, and how many properties have we helped you purchase since working together?
Yeah, so I think I've been working with you guys for like 7 or 8 years, something like that. I probably, well, right now I have, 54 properties in Charlotte, but I think you guys started helping me on house 8. So from 8 to 54, but you've refinanced me a bunch of times as well. So we've probably done, I would guess, like maybe 200 or so deals together with refinances.
Awesome. And how would you say that Marshall Reddick's helped you scale your business?
I think it's just, you guys are really easy to deal with. So like Stephanie was mentioning before, it's just, it's a relationship based business here. So it's all about the relationship. Once they feel more comfortable with you, they'll definitely make it a very simple and easy process for you, as long as you prove yourself with the loans you take out. I don't think I would have been able to build this size of business without them. It would have been really challenging. I have had other lenders in the past, so we all know that there's competition out there, but it's just that dealing with the others, it's not as easy as here, I would say. Yeah.
You touched on other lenders. How would you compare our process to other lenders' processes?
Well, especially like on the short-term financing, it's really simple over here. I've honestly come to Stephanie like on a Wednesday or a Tuesday, and we've closed on Friday a few times. Like, so if you definitely, if you need speed and things like that, they're really easy to deal with. You can just send everything over to her. She'll vet the deal, make sure it's a good deal. And as long as everything's good, they can get you, closed out within usually about like a week or two, I would say. They offer like, there's no like BS that they're telling you, right? So like when you go to another lender, they'll tell you and promise you the moon and say, yeah, we can do this, no money down or very little down. The interest rates are this and that. And then when you get to the closing table, sorry, it's going to actually be, 30% or 40% down at the other lenders, or sorry, the interest rate is now going to be this. Or I've even had it like recently where I tried for a long-term loan, they quoted me all the fees and everything, and then when we got to the closing table, the fees went up by like I think 15 or 20,000. So then I just canceled the deal. So anytime I've worked with Marshall Reddick, none of that stuff has happened. Whatever Stephanie's kind of like told you on the front end, that's what you should expect, and that's what will happen at the end of the day. So she'll tell me right up front, so I can sleep at night because I know, okay, perfect, this is what's going to happen, and we never venture off the path here, where it has happened at others. Sometimes they can't even close you out at other lenders, and then you're stuck and you don't know what to do.
That's awesome to hear. Thanks, Alex. We have a lot of stuff to cover tonight, so I'm going to move on. But again, Brad and Alex, thank you so much for taking time out of your night to jump on and share your experience with the audience. So appreciate you guys. So we've touched on, Marshall Reddick and our private financing, what we can offer. We've heard from a couple of guests. So what exactly do our loan programs look like? I have 3 of our programs listed on the screen. We have our renovation program that is good for those fix and flippers out there, or those burr investors, kind of like Alex and Brad, where they buy, renovate, rent, refinance, and repeat. We also have a new construction program that's good for the small time builder. We have some builders who build, 1 to 2 properties a year, and we have some builders who build, 12 a year. So we can support those small builders out there. And then we also have a bridge program that is good for the wholesale investor. For those of you who don't know what wholesale is, it's kind of a new fad where, you know, you purchase a severely under market value property with no intent to renovate, and then you just clean it up and put it back on the market for, you know, what current market value is. So we can help those wholesale investors as well. On the bottom of the screen, you'll see how you can access our loan programs, right? You can go to marshallreddick.com/loan programs, or if you just simply go to marshallreddick.com and hover over borrow, you can click loan programs and it'll take you the same route. First up, I really want to dive into what we can offer on the renovation loan side of things. Again, if you're on our website, you download or you go to our loan programs, you want to download the renovation rate sheet. And it's going to take you to this screen, right? All that we have listed on the website is what our current rates and terms are. A lot of other lenders out there will, you know, provide you very little information. You can't really find what their fees are. You can't really find, you know, what their interest rate is. We're going to give it all to you. Again, we believe in transparency. So find it on our website. We can offer 12-month terms. Otherwise, we also offer a 6-month term if you are confident you can get your project off the books in 6 months, and we can do that for a reduced fee. You don't have to take the whole 6 or 12-month term if you don't want to. You just get that amount of time if you need it. Our rates currently range from 8.75 to 12%. I get this question a lot. What's the difference between rate and APR? Well, the interest rate is just simply the rate that you're paying on the money that you're borrowing, whereas the APR takes into account any fees that you're paying on the loan side of things. So it's going to take into account the interest rate and any fees and express it as a percentage so that you can more clearly see what your true cost of capital is. All of our programs are interest only, right? So you'll be making monthly interest only payments on you know, a monthly basis. And then that means when you go to pay off the loan, your principal will be due at that time. We will finance anywhere from 75% of the purchase up to 90% of the purchase, plus 100% of renovation funds, so long as the total loan amount is no more than 70% of ARV. So the more you put down, the less the interest rate. The less you put down, the higher the interest rate. We utilize reimbursement style draws, right? So if we're going to finance 100% of your renovation cost, we're going to release everything in a reimbursement style fashion, which simply means you get the project started before we release the first draw. So maybe you're going to replace the roof as your first course of action. You're going to go and replace the roof, and then we'll reimburse you for it. As Alex mentioned, we can close within 7 to 10 days. Of course, the more time, the better, right? It takes pressure off of everyone. But if you need to close within 7 to 10 days, we can absolutely make it happen. And the reason we can make it happen is because we don't need that appraisal, like I mentioned earlier. We have a team of in-house underwriters who are going to value the asset. So they'll, you know, value the property both in its current market state as well as the after renovation state. And then they'll formulate the loan amount and therefore the loan structure from there, circumventing the appraisal. Our next program is our new construction program. So again, if you go to our loan programs, you're going to want to download the new construction rate sheet. And it's going to take you to our current new construction programs. Again, 12-month term on these loans. However, we understand that a lot of times new construction projects can take more time, right? Maybe you're waiting on the county to issue a permit, or maybe you're waiting on your inspections from the county. So if you need more time, as long as your loan is in good standing, we can offer, you know, short extensions if additional time is needed. Our rates currently range from 9 to 12%. Again, you're going to pay your interest monthly interest only payments. And we'll go up to 100% of the construction cost. So again, if you want to borrow less to save on interest, you're more than welcome to do so. But if you want to maximize what you borrow for a higher interest rate, we offer that program as well. So you can borrow 100% of your construction cost, so long as the loan amount is no more than 70% of the after construction value. Again, reimbursement construction draws. We have a predetermined construction draw schedule that typically works for most builders. However, we're flexible, right? We're a common sense lender. So if you need additional draws or you need to, change the draw schedule up front, as long as it's reasonable, we can accommodate that. For our new construction program, we can close within 17 to 21 days. Sometimes we can close quicker than that. It's just there's some more that goes into new construction financing than the fix and flip program. So 17 to 21 days is a good average. And again, there's no appraisal. So we have a team of in-house underwriters that will value the property in its current state, right? So essentially just the lot. And then they'll also value what the after construction value is going to be based on what you're going to do to the home or what you're going to construct. Next up are our bridge loans. So these again are good for those wholesalers out there. We have two options. The first is a 12-month term. The interest rate is 9.5%, interest only payments. And because you're not doing any value add or there's no intent to renovate in this program, we require a little bit more down. So 80% loan to value in this program. We also have a 36-month bridge, right? So this is good for, someone who is purchasing a property that maybe wants to stick a tenant in it and see what happens to interest rates, right? Some folks out there think interest rates are going to come down and therefore they just don't want to get locked into a 30-year fix right now. They just want, a shorter midterm loan until rates come down. This is a great program for that. The interest rate currently is 8.5%. Again, interest only payments, and we can go up to 70% loan to value in that program. We do need an appraisal, especially on the 3-year bridge. So typically, we're subject to appraisal timing. So the turnaround time frame is typically 2 to 3 weeks. Sometimes for lower loan to value, especially on the 12-month program, we can waive that appraisal. It's just a case-by-case basis, so keep that in mind. So if you have a deal, how do you apply for a loan? The same way we accessed all of our loan programs on our website is the same way you're going to access our loan application. So if you go to marshallreddick.com and you hover over borrow, you're going to click loan application and it's going to take you to this screen. Of course, you're going to want to click private financing. If you click conventional financing, it's going to give you the contact information to the conventional lender that I highly recommend. So once you click private financing, it's going to take you through a small questionnaire, which will ultimately get you to this screen here. You can see that there's 4 sections to be filled out as a part of our loan application, so it's extremely simple. It's going to take all of about 10 minutes to fill out. It's going to ask mostly about information regarding the property as opposed to you as an individual. And to save you time, I prefer to input this over the phone, right? So I can input this on your behalf over the phone. I know a lot of, contractors out there, fix and flippers, builders are constantly out in the field and you're not in front of your computer all day like I am. So to make life easy on you, I would love the opportunity to just jump on a phone, build a relationship and do the hard, heavy lifting for you. So if you have, a loan application you want to input, feel free to give me a call. I'm happy to do it for you if that's easier for you. So we mentioned that we have reimbursement style renovation and construction draw processes. So what exactly does that process look like? Well, at origination, when we're funding your loan, we're going to connect you with the funds control analyst. What's cool about the funds control analyst is that you're going to be assigned to one analyst for the life of your loan, in addition to all loans thereafter, right? We're not going to pass you around from person to person. You're going to have a small team that you can reach out to anytime. The funds control analyst is your friend, right? He's going to help you establish a draw schedule. We're not going to tell you which draw schedule that you need to use. You're going to let us know what's going to make your project successful. And then once you send it to us, we're going to review it and make sure it's reasonable. And then, once it's solidified, you're going to go and do the work and, complete your project. We have no formal draw inspection that's needed. This is huge. A lot of other private money lenders out there require a formal draw inspection, which takes time and money, right? takes a week for them to schedule the actual inspection, and then it takes a week for them to submit their report to the lender for review. And it's just a much lengthier process than it needs to be, and much more expensive, right? Because the lender's not paying for that inspection, you as the borrower is. Once you have a draw to submit, you're going to want to gather your information. And because we don't require an inspection, you're going to want to take a walkthrough video, right? You're going to want to start from the exterior of the property, do a 360 of the neighborhood so we can, confirm that it's the subject property. And then you're going to want to walk around the exterior showing, what items have been done, and then walk through the interior showing the same. You're also going to want to gather a list of items completed, right? So if, your draw schedule states that you're going to do the roof and exterior paint first, and you did the roof and exterior paint, then you're going to do a walkthrough video. You're going to tell your funds control analyst that the roof and exterior paint is done. You're going to tell them what, those items being done, constitutes in terms of the percentage of completion, right? Maybe it's 25% complete. And then you're going to tell them that you're on track to do the next set of items in the draw schedule. You're going to package all of that up in an email and send it to your funds control analyst, who's going to review, right? He's probably going to ask you some questions and just make sure that everything's there, because ultimately he's going to send it to the lender for final approval. So again, your funds control analyst is your friend. He's a facilitator. He's going to help you get your draws in a very quick time frame. And then once, lender has approved the construction or renovation draw, you're going to receive a wire transfer to your bank account. So what happens when you have a deal, right? What does the overall process look like? Well, if you need a pre-approval letter in order to make offers, give me a call. I'm happy to discuss and ultimately provide you a pre-approval letter. We're then gonna input the loan application together over the phone preferably. And then I'm gonna let you know what documents we need, right? Very little red tape, very little documentation. So we really need the purchase contract, scope of work, photos, and some other, documentation in relation to the borrower. I'm then going to assign you to an investment analyst who is going to be your point of contact going forward. And they're not only going to be the point of contact for this individual or your first loan that you're going to do, they're going to be the point of contact for every loan thereafter. So again, we don't want to pass you around from individual to individual. We want to give you a, solid, small customer service team. Once you're assigned to the analyst, they're going to get us through underwriting, and ultimately we're going to provide you a loan structure that you're going to approve. And once that's approved, we're going to get you through the escrow process, right? We're going to make sure that title work looks good. We're going to introduce you to your funds control analyst so that you can establish your draw schedule. Then we're going to produce loan documents. We're going to send those loan documents to you ahead of closing, right? I don't know how many people who have gone through the process, you show up at escrow and they just shove some documents in your face and say, hey, sign this, and you have no time to review. We're not going to do that to you. We're going to make sure that you have plenty of time to review the loan documents, make sure everything's listed correctly, make sure everything's listed according to what we had agreed upon before you go and sit down at escrow's office and sign the documents. We're also going to make sure that insurance is in place, and ultimately we're just going to close and fund the loan. I have customer service listed at the bottom of the screen because we're not just going to leave you high and dry after we fund the loan, right? Customer service is huge to us. If you have any problems, if you need any potential changes to your draw schedule, if you have questions as to where to make your monthly payments, give us a call. I'm more than happy to help, and I know both of the analysts that you're going to be assigned to are going to be more than happy to help as well. So as I mentioned, if you need a pre-approval letter, I'm more than happy to provide one. It's no problem, just give me a call. I'm going to ask you for a bank statement just to confirm, you have the means to actually do the deal. You're going to let me know what kind of loan that you're going to do. We're going to talk about the subject property and what you're going to offer. And essentially, I'm going to provide you a pre-approval letter that looks like this. It's going to be property specific. It's going to be, specific to the amount that you're going to, offer. And, we make this property specific so that when the listing agent calls, I can instill confidence in them, right? Oh, Brad Long, yes, 123 Main Street. I've worked with Brad for many years. We can close extremely quickly. Whenever you want to close is totally fine. Like, he's solid. We're more than happy to help, right? It's just going to instill confidence, especially in a listing agent who is looking to make a commission. They're going to be like, okay, wow, these, this lender is solid. They've worked with the client before and they're ready to go. They can actually close. Here I have a couple of recently funded deals that we've done. The point in me bringing these up is just, showing the high leverage that we offer, right? The property on the left, the borrower purchased for about $193,000. We lent him $173,000 to purchase the property, and essentially he wanted to finance the renovation budget on his own. So as you'll see, super high leverage. I think it's around 90%. The next property that I have listed is a new construction property. Again, high leverage, right? The borrower wants $168,500 for his construction. That's what his budget's going to run him. And we therefore lent him the whole $168,500 to be released in a reimbursement style fashion as he gets the property constructed. Next, I want to go over some frequently asked questions that I get on a frequent basis. The first being, does Marshall Reddick offer owner-occupied lending? Again, unfortunately, we don't. We're just not set up to do owner-occupied lending, but I have a very good referral, so feel free to give me a call. Happy to, connect you to Reed Hazard, who's our preferred conventional lender. Does Marshall Reddick work with loan brokers? Yes, we work with loan brokers. And if you're interested in getting set up with us, if you are a loan broker, give me a call. I can, kind of run you through how our process works and get you set up so that we can start doing some deals together. How do I request or obtain a pre-approval letter to submit with my offer? Again, just give me a call. I'm going to ask you a couple of questions. It's an extremely fast process. I can literally give you a pre-approval letter in 30 seconds. So just give me a call. If I miss you, I will always call you back. And again, happy to provide as many pre-approval letters as you want so that it's property specific and looks professional when you're making offers to the listing agent or the seller. Can I get a non-recourse loan as a non-retirement account individual or entity borrower? This is a good question. I get it a lot. The answer is no, unfortunately. If you're not a retirement account, then you can't get a non-recourse loan. We only offer non-recourse loans when federally required, right? So if you're borrowing in your retirement account, it's federally required for you to get a non-recourse loan. In that case, we're more than happy to extend one. If you're just a regular LLC, corporation, individual, and you're not using your retirement account, no worries. It's just going to be a recourse loan. Where does Marshall Reddick get the money to originate these loans? Marshall Reddick gets the money they use to originate these loans two different ways. The first is through direct mortgage investors who, finance these mortgages as a passive investment. And then we also have a Marshall Reddick mortgage fund that we lend a majority, or we use to lend to a majority of our deals. If you have any questions or are interested in mortgage investing or investing in our mortgage fund, also give me a call. I'd be more than happy to give you a rundown of what we can offer and the returns that we can extend. I have a promo code listed on the screen. So write this down, screenshot it, save it. This code is going to be good for whoever is on the call tonight who wants to do their first transaction with Marshall Reddick, right? So if you reach out and use no red tape, we're going to give you a half point off your first transaction in addition to no processing fee. So just give us a try. You will not be disappointed. We're so confident that you won't be disappointed that we're, more than happy to give you a discount on your first transaction to try us out. I have many clients who used to use other lenders who it took one deal for them that made them transfer all of their deals to Marshall Reddick. I actually just closed a loan a couple of weeks ago for a new borrower, and she called me after she signed all of her closing documents at escrow, and she said, "Hey, Stephanie, I signed all of my closing documents. What's next?" And I said, "Oh, okay, we're going to fund the loan now, like all is wrapped up." And she's like, "That's not possible. There has to be additional hoops to jump through. There's no way getting a loan could be this easy." And I said, "Well, You did everything that you had to. You gave us all of your documentation in a timely fashion. So it really is that easy. So again, use this promo code to give us a try. You won't be disappointed. And if you are disappointed, which you won't be, at least you got a discounted loan. This concludes our presentation tonight. So again, as I mentioned at the beginning of the presentation, we have an exit survey. Again, fill this out, take time to, give us some more information as to how you heard about this presentation. If you were referred to us by one of our existing clients, I would love to give them a discount on their next transaction. So please don't forget to fill that out. And like I said, that concludes our presentation tonight. I'm going to leave my personal contact information on the screen for a couple of minutes here. Feel free to screenshot or take my number and email down. Again, this is my personal cell phone, so feel free to call or text. If I miss you, I'll always give you a call back. And yeah, would love to hear from you, and I would love to do our first deal together so that we can show you just how easy Marshall Reddick is to work with. Thank you so much for joining tonight. I hope everyone has an awesome night.